In this weekend video, I want to take a look mostly at gold. I think it's about ready to take off on the next leg up, and that may be driven by some kind of crash event in the stock market. I've covered that in depth in the weekend report. I'm not going to go over it again here in this video. If you want to get that analysis, just read the weekend report. But for gold, you can see that this hasn't, so far anyway, this hasn't unfolded as the typical sharp correction that the majority of intermediate cycle declines progress through. And by that I mean price got stretched pretty far above this 200-day moving average, and most of the time you'll just get a sharp ABC move down. This would have been our A move, the B bounce, and then the C move down. But this would have come down much further to maybe test this 200-day moving average, or at least get close to it. But this correction is not playing out like that. It's playing out mostly as just a sideways churn. We're almost 2.5 months into this correction, and all gold has done is shed like 100 points. And I would argue that even this last few days had to be manufactured, that gold probably was not going to move down below the October low naturally, not on its own. The attacks on the gold market, especially in the pre-market, over the last week and a half, have been larger than anything I've ever seen before. So it's taken a huge amount of attacks from the banking cartel to even push gold below this October low. And as I said in my last video, I think the bloodbath phase began on Thursday with this was about a 26,000 contract attack, if I remember right, that broke below this support zone here at about 1480. So in my opinion, that would be day one of the bloodbath phase. They usually last 5 to 7 days, but I think this is what we need to watch closely next week. If gold doesn't follow through to the downside here, if instead it pops back above this October low, which was about 1465, and especially if it gets back above this 1480 support and resistance zone sometime next week, without any follow through to the downside, then I'm going to say there's a very strong chance that the banks have gotten lured into another short squeeze. So this is something I'm going to watch closely next week, is this 1465 low, the October low, and if gold doesn't follow through on this break and instead closes back above that next week, then I think there's a very good chance that another short squeeze could develop in the metals market. A couple other things I'm looking at. Even though gold did make a lower low, the juniors have not dropped below the October low, at least not yet anyway. The silver miners are exceptionally strong, not even coming close at this point to the October lows, and maybe that is a bell ringing that maybe this particular, or this next intermediate cycle, maybe you want to look at the silver miners as possibly outperforming the gold miners this time. And a few mining stocks that are not breaking down. Coeur d'Alene here is actually making higher highs. That doesn't seem like this stock is anticipating a severe breakdown in the price of gold. Franco-Nevada has just been more or less churning sideways for the last 2.5 months. No no real breakdown in price in this miner either. I like the price action in Hecla as well. You can see it recently broke out above the 200-day moving average, and as gold is making new lows in this intermediate decline, Hecla is actually making higher highs. And then the two heavyweights, Newmont, mostly just going sideways during this correction. It did break below this support zone at $37 a couple days ago, but it is now about to hit support at the 200-day moving average, and really, if you look at the long-term picture, hasn't really given back much at all from this recent rally. And then the other heavyweight is Barrick Gold, and again, this has been mostly just a sideways churn, and this is a pretty well-defined falling wedge, and that tends to be bullish. The breakouts tend to be to the upside when they come. A little bit more close-up view of Barrick. You can see this again has mostly just been kind of a sideways churn that has allowed the 200-day moving average some time to catch up to price. Not really the typical sharp move down that we see during normal ICL. So I think there is a lot of potential brewing in the metals market right now, and I think there is a lot of risk accruing in the stock market at the moment. So being a contrarian, I want to sell when everybody else is happy and buying, and I want to buy when everyone else is scared. Right now, I think we are definitely starting, if not well into the complacent phase of the stock market rally, and we're at least almost 2.5 months into the corrective phase of the gold market, and for the most part, that correction has unfolded more or less as just a sideways churn to allow the long-term moving averages some time to catch up to price. So I'm going to be looking for a possible bottom next week, or maybe the week after at the latest.